London, Warsaw and Sydney-listed Prairie Mining is a coal mine development company that aims to use its large-scale deposits of coking coal to become Europe's lowest cost supplier of coal to the European steel industry. Prairie Mining Chief Executive is Ben Stoikovich, and he joins us here now. Coal at the moment, for environmentalists at least, has got a pretty bad name. What's the difference between coking coal and the other sorts of coal? That's
an excellent question. So thermal coal is used in power generation, and that's been a little controversial of late as Europe has switched into renewables, wind and solar. But we've got coking coal, and coking coal is used exclusively in the steel industry to make the steel that goes into electric vehicles, it goes into offshore wind farms, to the windmills, and we have huge deposits of this in Poland. And coking coal is such a critical raw material for European industry that the EU's actually designated it the second most important critical raw material for Europe. And that's because Europe is dependent, 85% of its coking coal comes from imports.
And how far down the road to production are you? Because I know that you're in this development process at the moment.
So our first project, Yankarski, we've been working on that since 2012. We've conducted an exploration program, a scoping study, a pre-feasibility study. We're currently in the process of completing a bankable feasibility study, and that study is being conducted by our strategic partner, who is China Coal. China Coal is a large Chinese government-owned coal mining company, but importantly, they're the most prolific coal mine construction firm in the world today. And the deal we have with them is, if they bring forward a Chinese bank financing package to build the Yankarski mine, we will give them an EPC contract to run the mine construction.
EPC?
Engineering, procurement and construction.
Right.
So a building contract.
Right.
So they're in the process of finalising that bankable feasibility study, and it should be in the next, say, 4 weeks. And then we'll be going back to China, engaging with the Chinese banks to unlock the debt funding package. And as that happens, we should be in a position to start construction of the Yankarski mine during 2018. And that's a large-scale mine. It will produce up to 6.3 million tonnes a year of semi-soft coking coal.
Is there any other comparative mine in Europe that produces the same sort of coal in the same sort of quantities, or is this an unusually large deposit in a very accessible area? It's
an unusually large deposit. Bear in mind what I said earlier, that Europe relies on imported coking coal for 85% of its requirements. What that means is some 64 million tonnes a year of coking coal are imported from Australia, from Mozambique, from the USA and from Canada. And all we're aiming to do is develop that resource domestically and sell it into Europe. And we can do it at a much lower cost because we cut out the transport cost. You imagine the cost of transporting a tonne of coking coal from Queensland in Australia to a port in Europe and then inland into a steel mill. It can be $30 or $40 a tonne. We'll eliminate that cost.
So do you know much about the economic dynamics at the moment in terms of what it's going to cost you to get it out of the ground?
Absolutely. For the Yankarski project, our cash cost of production will be around $25 a tonne. That's compared to a semi-soft coking coal price in the international market today of around $105 a tonne. So there's a huge operating margin in there.
Yeah. Do you think that you will be able to offload all of your coal to the European demand, or will you then end up having to go elsewhere because demand's been sort of satiated?
So Europe consumes around 80 million tonnes of coking coal every year. From the Yankarski mine, we're looking to produce about 6.3 million tonnes per year. Now, what I said before was that 85% of Europe's coking coal requirements are met by imports, so 64 million tonnes. So we're going to be producing about 10% of that, import requirement. So we'll just replace the imports. So there's plenty of size in the European market to absorb all of our product.
Talk to us a little bit more about the relationship you've got with this Chinese company and what they're going to provide in terms of funding. Do you have to come to the market at all, first of all, for any money? Or is it all going to be supplied through this Chinese partner?
Well, they can provide up to 85% of the upfront capital cost of the Yankarski project. The balance, the 15%, we can raise that from offtake investors, from other strategic investors, and for any shortfall, we would consider coming back to the market. But keep in mind, I've got a large cornerstone investor called CD Capital, which is a London-based mining private equity fund. They've been invested in Prairie Mining since 2015. They've already put an initial sum into the company, and then we've got commitments for them to put in up to $83 million. So certainly their commitments may speak for a lot of that equity requirement. But we also have a second project, and that's a project we acquired in late 2016. And in terms of our share price, when we acquired Debiensko, it was 11.5 pence. That was November 2016. Today our share price is 34.5p. It's a 188% increase over that period. And that's because Debiensko is a prime hard coking coal asset. It's a formerly operating mine in the south of Poland. It's got 2 currently operating mines right next door, so we know we can mine the coal. Technologically it's proven, geologically it's proven, and the coal quality is well understood by regional steelmakers. We have half a dozen regional steelmakers within 100 kilometres rail of the mine site. And the Debiensko project, our scoping study, which we published in March 2017, showed we can produce around 2.6 million tonnes per annum of premium hard coking coal. Now, premium hard coking coal sells in the international market today for $250 a tonne. We can produce it at less than $50 a tonne.
Right, so what's in the share price? And you referred to the share price earlier. Let's take a look in some more detail at this, because we're currently trading at what, 30, almost 35 pence. You mentioned that big uplift you've seen since October, September 2016. What is built into the share price at the moment? What are you selling to investors? Because it's a long period before you're going to get any income into the business.
Well, what we have in the ground are proven resources of coking coal. Coking coal is an exceptionally scarce commodity. There's not much of it in the world. And high quality coking coal that we have is even more scarce. So we have control of those assets, and the investor base attributes a certain value to the coal sitting in the ground. So what does our share price reflect? Typically the way analysts look at it is they'll look at the intrinsic value, the NPV of our projects when they're in production. And then they discount that back, given that there's 3 or 4 years to go until we get into production, and that's reflected in our market cap and our share price. So the closer we get to being into production, the closer we'll get to unlocking the full intrinsic value of those assets. And the NPV, the combined NPV of both of these projects, it's huge. It's over $3 billion US.
Okay, let's put it all together and work out where you're going to go in 2018, because obviously there's a lot of things going on at the moment. You talk about a report you do in about 4 weeks' time. Yeah. What else should investors look for in terms of milestone achievements for 2018?
We're waiting for our environmental consent for the Jankarski project, and that's all been submitted in October last year, and it's in process at the moment. It's with the Polish authorities. We should be looking for term sheets and credit commitments from the Chinese banks for the financing of the Jankarski mine. At the other project, at Debiensko, the hard coking coal project, we're going to commence an infill drilling program this year, and then we're going to move into a pre-feasibility study, which should be completed by the end of the year. So they're the major milestones for the next 12 months. Good.
We'll look forward to hearing more about the projects and how things go. Thank you very much indeed for joining us. That's Ben Stoikovich. He's Chief Executive of Prairie Mining, a company with 2 assets which it hopes to prove up and bring to production in the early 2020s for coking coal to supply the European demand. Subscribe to IG for educational content, company insight, financial analysis and expert commentary. Or visit our website for daily market updates, trading ideas and strategies.